If your home is destroyed or burned in the fire, do you still have to pay your mortgage? What about property taxes? What if you fall under Prop 13? How does that affect you? Make sure you watch this video. I'm going to discuss all of those and what we're seeing when it comes to price gouging right now, especially for rentals. Hey guys, Scott Himmelstein with the Scott Himmelstein Group, your local Los Angeles realtor. All right, so we have a lot to talk about on today's video. And so like I said in the beginning, some of the questions that we're getting right now, and they're valid questions, is, if your house burns down or is completely destroyed, annihilated, whatever you want to call it, the question is do you still have to make your mortgage payments? And of course, do you still have to pay your property taxes? And again, how does this affect you if you fall under Prop 13? So let's start off with mortgage payments. So in the event that your home burns down, yes, you still have to make mortgage payments. And the reason is, kind of think of it like financing on a new car. A deal's a deal. So if your car gets stolen a week after you buy the car, you're still responsible for those payments. So, that's the example I would give. But you know what? Obviously, this is an extenuating circumstance. And so one of the things that's really comes up right now, and this reminds me of back in the short sale days, is forbearance if you're not going to be able to afford to be able to pay it. And I think a lot of people are going to be in the same boat, to say the least. So the forbearance is kind of like the technical term for essentially deferring your mortgage payments. Now, it is possible, and if it's something that you think that you may want to do, you would have to contact the mortgage servicer, not the original bank that actually extended the loan, but the company that's now servicing the loan. So obviously, you're going to have to tell them what actually happened. You're going to have to probably give them a lot of documentation and whatnot. But this is something that you might be able to do. So what do you actually need to know about forbearance? So the thing that you need to do is that if you're going to defer your payments, right, that you do have to know that those obligations do not go away and you will continue to accrue interest. So you'll be able to see that loan accruing interest still, whether it be 1 year, 2 year, and essentially they just put those missed payments that you're not paying currently, they just add it to the very back. So that is something to keep in mind too. So really, you're not missing any payments. They're not forgiving any payment, but you're just kind of tacking it to the back. And so I do believe that you're going to see a lot of people doing this. And I also think that you're going to see a lot of these loan servicing companies that they're going to try to find a way to work with the homeowners that are in this boat, because we're not talking 10 to 20. You're talking thousands of homeowners across Southern California that are going to be in this boat. So another interesting question here is, if your home is severely damaged or destroyed by the fire, right, what happens to your property taxes? So under California law, if you experience more than $10,000 in damage or total destruction to your property, you can actually defer payments. But then again, those tax payments, they are still a necessity. So you will have to owe that money at some point. So one thing to keep in mind is that, the land is still yours. And that's really an interesting thing as well, because if the house burns down entirely, well, you're on the hook for the value of the land, not the structure. So when you take a look, like a lot of places, whether it be Altadena, the Pacific Palisades, or Malibu especially, it's the land, ironically, that really has the most value than the actual structure itself. So that's something that you're going to face a tax hit, right? So you might be able to defer that as well. That's a conversation you're going to have with the actual tax assessor. But your reduction in the property taxes, if they call it the misfortunate calamity, again, misfortunate calamity, and the home will be valued at zero, but the assessor says the land will be taxed still. So that's something that's really important to keep in mind, that the land is going to be taxed still, but the structure itself will just be zero. Well, here's another question. And there are a lot of people in these areas where you've seen so much destruction that they fall under Prop 13. They lived in this house for decades, and if their property taxes, they are protected under Prop 13. So if you rebuild and you fell under Prop 13, well, you'll still get the Prop 13 protections. Your tax base will be restored to what it was before the fire. Now, what's interesting about that is that you can actually build up to 120% more without triggering any reassessment. So if you rebuild to 100%, right, then what you had before, your property taxes won't change. So as long as you don't go above that 120% threshold from what you had before, you will be fine. So this is something you're going to have to figure out as well. So these are three really good questions. And then I think the fourth thing that right now we're seeing, and we're getting a lot of questions about, is kind of when it comes to price gouging, especially on the rental side, where you're having a lot of these people that maybe they had it for 5,000 or 6,000 a month, and now, you know what, hey, all of a sudden they're asking 10 to 12,000 a month. So after a disaster, right, you are only allowed to be able to increase the price up to 10%. Now, after that, it's really considered price gouging. But what happens if maybe you had taken the property off in the market in the fall and before the holidays, and so you weren't on the market, right? So in that case, it really comes down to supply and demand. So if you had a property that maybe it probably should have only rented for 5,000 or 6,000, you know what? Unfortunately, these people can actually put it back on the market, for 10 to 12,000. So that is something that they could do. Now, what we're seeing is you do have a lot of rentals out there right now, and all of them seem to have a lot of competition. So this really goes for places like Santa Monica, Venice, Marina del Rey, Brentwood. A lot of people close to the Palisade fire, they want to be in those neighborhoods. Now, I do think just because the amount of rental inventory, the supply, there's not enough, and you're going to see people going out into the San Fernando Valley for the Palisades fire. But for the Eden fire, maybe you have people that you're going to be looking at now: Pasadena, La Cañada, Monrovia, other areas around there too. And we kind of expect that same thing to happen too. So I do expect you're going to see a few more rentals come on the market. People who maybe had second homes, people maybe who had Airbnb, maybe they thought they couldn't get what they wanted before, but now they're going to have a better opportunity to get that moving forward. All right, let me know what you think about this video. If you have any questions, anything I didn't cover, something you'd like me to cover, definitely feel free to reach out. Hope this video was informative for you, and we'll see you on the next one.